Yeah, every cycle, Dogecoin tends to jump up at some point, like it has its day. Elon Musk's influence on this cycle has been overstated in most circles. People forget very easily when they start like winning so much, they start to forget how all the memories of what happens when like something tanks and like Bitcoin goes down. Then
What are the gas fees on Tezos for NFTs, or how does that work?
Less than a penny.
The last couple of days been tanking, so
Interesting, yeah.
healthy pullbacks, I think, though.
Yeah, it's good to be able to see what stands its ground in these times. Though this is like the first nice like consolidation period we've had. This kind of anybody's game. It's the next few ones will start to what stands its ground because people make those. Now everyone just panics though.
Especially after 2020. I mean, when everything just dropped in one day, over 50%, that was scary.
People forget very easily when they start like winning so much, they start to forget how all the memories of what happens when like something tanks and like Bitcoin goes down, then everything goes down more than what you do in those situations. Very short-term memories.
Yeah, nobody likes it when it's going down. You know, we all hope it just a forever rocket ship to the moon, never any downturn. But I think it's better that we get corrections along the way, so that way it gives you buying opportunities as well. A lot. Just keep hodling.
Yeah, it's hard to root for a position that's like for it to go down so you could buy back in again, because like that means you have to wait for it to come back up before you can actually reap any kind of a profit or end game there. So like it's a hard thing to want to do that. So which is why it's so much easier to just buy whenever and then just hope it goes up forever. And if it goes down, you just keep saying, no, it's going to turn around. It's going to turn around. It's like until you make that step, it's like, all right, maybe I should have shorted before. Maybe I'll short now. Then you're just rooting for it to go down, 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 down. And then you have the other problem of buying in too late for the turnarounds. But it's a hard like beast to manage psychologically.
Yeah, it definitely scares you because I'm fairly new to crypto. I barely got into it like 2018, so I'm still kind of learning along the way. So I missed the whole 2017. I got in after the big run, but I've been trying to do research and trying to stay informed, and definitely like once you go down the rabbit hole, you just keep wanting to learn more and more and more.
Yeah, the best investment now is the knowledge because it's just so early. I was looking at the numbers yesterday. Ethereum has less than 1 million daily active users. And I remember when MySpace hit 40 million daily active users, everyone was like, it's over. There's never going to be anything beyond that. Like, this isn't like Friendster or whatever the hell. And then it was like, now you have Facebook that has over 2 billion daily active users. And only like a few years after they launched did they hit the billion mark. So like, it's all about perspective. At the time you see the biggest number, you can't imagine a number bigger than that until a bigger number comes. And it's like, oh, we were fools for thinking that was anything special. That was tiny. Oh my God, there was nobody there. Nobody knew.
It's only going to keep growing because it's not like people are going to start using technology and phones less, especially in developing countries. Maybe here in the United States or whatever, it's more common, but it's only going to keep growing. Those 2 billion is going to turn into 3.
Yeah.
Or in the future, especially with population just keeps growing as well.
Yeah. That's why when I talk to these Ethereum maximalists, I feel like the smartest ones are very respectful to the other blockchains because they know it's anybody's game. And then the margin of difference is just, it means nothing in the long-term perspective. And I can tell just how defensive people are about Ethereum, how new they are too. It's like, oh, okay, you haven't been around very long.
So is it safe to say that Bitcoin is the only sure bet and everything else is kind of still not even Bitcoin's a sure bet? Or what's your opinion on that? It's
the strongest by every measure. But they're going to have, like, the bigger anything gets, the more hurdles it also gets too. I hear a lot of people who are very bullish on Bitcoin going to the effect of like, oh, well, the institutions are coming in, the institutions. And this is a narrative that's been playing out since the very beginning. And the fact is there's always institutions coming in. Like, it's never stopped. It's not like it's starting now. It didn't start with Tesla. I mean, it was, it's just that as the asset grows in market cap, the demand of what we consider to be significant institutional involvement increase, like what the requirement of what we consider to be that increases as well. So what we consider to be institutions coming in 5 years ago, well, we already hit that. But now it's like nothing compared to what's needed. And now that Bitcoin is 10 times bigger than, we were looking at. Even last year, there was I think its low was at like 4,500, maybe less in 2020. It's like, this is, yes, like, but now to hit like 65,000 or 65,000, that was its peak just before the last few days. It's like, okay, you want the institutions to come in? Now, let's say they did. Let's say you had 100 more companies like Tesla coming in. There's people just pounding in billions and billions at a time. You don't want that. Bitcoin is strong because it wasn't made by those institutions. It wasn't sustained, or it didn't grow to $1 trillion by those institutions. It grew because of people and an individual level, and having a very diversified base of holders. That's what makes it strong. Once you have if you have enough institutions to move the price up, well, then they have enough power to move the price down. And then that compromises the integrity of the Bitcoin user base being so strong and impervious to institutional manipulation of the price. So even if that were to happen, we shouldn't want it to happen, right? We should but it's like, no, we want to get the price up faster and let it go there. It's like, yeah, but that's, easy come, easy go. Maybe it sucks to have to wait longer for it to consolidate a user base that's so diversified, with small hands, each putting in a little bit, but like the dividends that pay off of that in terms of an asset with just so much consolidation and integrity, and so diversified, that's what we should be shooting for. The other problem I think people are going to have, I think Bitcoin will always be around. Bitcoin will always be, let's say it could be the strongest one of everything. It can't be the only thing in this form because of what we've seen lately with sort of activism on the energy side of it. So for one thing, it's like there used to be the argument, we always used to defend Bitcoin by saying, oh, the amount of energy that it takes to mine Bitcoin, which is the process of using all this computer processing power to be able to generate more Bitcoin from, or to get more Bitcoin out of the program that it on which it's created. It used to be a lot less. The amount of energy consumption that was necessary, it was like, not even 1/1000th of 1%. What are you getting all up in arms about? It's like nothing. Come on. Collectively, it's like nothing. I mean, if it were 100 times beyond this, then it still wouldn't. You shouldn't consider it. So there's a problem with that. It's the fallacy of relative privation, because you're saying that, oh, well, what does it matter if I don't recycle? Like, look at that landfill over there. What if I drive a gas guzzling SUV? Look at that factory and the smokestacks. Come on. It's like, no, at least with the environment, if nothing else, we all have to do our part. That's our thing. But still, like to some degree, okay, it wasn't really that big of an issue. But now we can't say 1/1000th of 1% anymore, because of the way that the mining competition works. Is the amount of computer processing power you need to compete keeps growing exponentially, and therefore the amount of energy consumed by that is growing exponentially. So Cambridge runs an index on this in real time, and then they annualize it to project how much energy consumption is being pulled right now. Now it's about 0.6%, which is a lot more than 1/1000. Okay, so it's getting to 1%, and then it's growing exponentially. So we could say maybe there'll be a time, could be in a couple of years, to say, oh, it's 5 to 10% of our energy consumption. It could become, and Bitcoin mining won't end for another couple 100 years.
100 years, yeah.
So there's a lot of time. It's very, very possible, if not probable, if not extremely probable, that within our lifetimes we could see it get to 99% of our energy consumption or more. And also, part of that is also because of good things happening, which is that we're reducing our energy consumption as a people as much as we can, or moving to renewable reusables as better. But still, it's still going to grow. But definitely the rate of Bitcoin energy consumption is going to outpace everything else in terms of growth of demand. So that's something that can be addressed, though. So it's not all doom and gloom. I don't think that methods of trying to address it have been very great so far. There were some attempts at doing something called a hard fork, or a contentious hard fork, where a group says, all right, we'll change the code from here and do it a different way. So there's like a Bitcoin green
plan or something.
Yeah, it's not going to work unless it galvanizes the entire Bitcoin community and all of those node operators. So it's not all those people who are putting in their computing resources to maintain it. So that's not how it's going to work. But yeah, I think, but I am very optimistic about the collective action of the community, because especially when it's about money, that has a very galvanizing network effect. People want to do what's right. And if it were to come to a point in which any of the practices in Bitcoin, of Bitcoin today, were to need some kind of, without violating the fundamental tenets of Bitcoin and what makes it itself, can be changed or something added on, then that will come to be as well. Also, I think it's great that there is a financial incentive to get cheap electricity, because you make more money if you don't have to pay for all the electricity. Yeah. So that's pushing for renewables and all of that, not just getting cheap energy sources. Or I think a lot of college kids would go into their a school computer lab to get free electricity so they could mine Bitcoin. Now schools are onto that. They don't look for, you can't do it anymore. Plus you need a lot more hardware requirements. So
I was watching videos of people that they used to mine in the dorm rooms too. They, like back in the day, when it was you could just get your rigs there. Right now, do you think that could be some kind of regulation because of the energy that could be used as an excuse that it's too much energy being used?
No, because the competition incentive is too high. If there were regulation, let's say the United States said, all right, we're gonna really rein in on this Bitcoin thing out here. They would never do that, because then it's like China would be like, great, now we can consolidate our own mining efforts. So that's what competition does. It makes people more eager, and governments and institutions more eager to compete better and differently. So yeah, I think. But what I am also very optimistic about are all the other blockchains. Bitcoin is just one blockchain. It's the first blockchain. It's the one we tend to rally behind. Even other financial asset classes that are crypto, they tend to draw, in a sense, from Bitcoin as the mass in that. And if you look at the markets, I've been warning a lot of these people who are just buying up every coin like crazy, because I remember from previous cycles, when Bitcoin rears its head and goes down a couple percentage points, the rest of the coins freak out, or the markets for those coins, and then people start selling harder those other coins, because everybody wants cheap Bitcoin.
Yeah.
So they'll liquidate their other assets so they can get the cheap Bitcoin, and so it tends to it tends to hurt those things. But when Bitcoin rides high, then everything else consolidates and catches up. People take their gains from Bitcoin and then they buy.
Then they go into the next ones. Well, we know it looks like Dogecoin is going to be the winner.
Yeah.
What do you think about Dogecoin?
Yeah, every cycle, Dogecoin tends to jump up at some point, like it has its day, and then you don't hear from it for another few years, and then it comes back again. This time it's a bit different, because Elon Musk put his. I think Elon Musk's influence on this cycle has been overstated in most circles. But one thing I will say it definitely had influence on is that rise of Doge, because it wouldn't have. I don't think it would have lasted off as much and as hard as it did, and sustainably so, if not for that type of endorsement getting the word out. I think most people who bought it probably never even heard of it before this cycle because of it, and largely because of Elon Musk, or people who learned from Elon Musk who told them, or such and such. Yeah, but I think people also need to be careful. If Elon is trolling the SEC, that's what all of this crypto stuff is about. He's just does not like the SEC. They've always given him a hard time. He's always been about power to the people in markets, and how that's economically that's better for all of us. And free speech and free activity in that regard. So, when Wall Street Bets came around, the Reddit group that led to the sudden rise of GameStop, what was the other one?
AMC.
Yeah. And he's just like, this
Nokia.
is awesome. Yeah, he was happy. It's like, this is awesome. Now we finally have the power to do this. We have the power to get this done. To be able to take back things from the manipulations of the institutions. And yeah, I mean, he was like, I think that point was a really great point and a great time, largely because like what we saw with those stocks were that there were hedge funds and short sellers that said, oh, these things are on decline. Let's, what they always do. It's like, let's short these
bankrupt the companies. Yeah.
Yeah, but then all that happens after that is like, oh, look, they're shorting that. I guess it's over. Let's short it too. And it becomes a self-fulfilling prophecy. So it gives those that have the institutional power to make those kinds of plays the power to even decide what companies last. What's going to succeed, what's not. Who let them anoint what works? What happens to actual, the resiliency of companies based on people who care about it? Where's the brand sentiment for GameStop coming up? There it is. It's Wall Street Bets. Wall Street Bets said, you know what, we're actually really loyal to this because all of our childhood memories and everything are associated with this wonderful brand. I mean, if you can save and bail out Ford and Chrysler and GM because it's such an iconic American brand, why can't we say that about GameStop?
Yeah, I think this is just. Awesome. You think this is just the beginning of these kind of rallies? Where I think this is early, where we're gonna start seeing masses of people like right now, GameStop, AMC, Dogecoin, just the power to the people, and that's kind of what crypto is too. Like we were talking about earlier on Bitcoin. Once the hedge funds come in and they control most of the Bitcoin and they have the billions of dollars, now they're able to manipulate the prices when we don't want that. We want it to be with the masses.
I think it's ultimately the best benefit because the thing you can't stop, no matter what you do, is going to be just the collective action of many. No matter how much money you have, it's very, very hard to manipulate all of those individuals who are very suspicious. They don't like getting marketed to. They like things coming out of a groundswell. If you try to do anything else, they'll actually act against you. So I think the competition would be to be responsive to that, which is a great thing. So if you're a hedge fund, it's like, how do we track Wall Street Bets? How do we get to know what the people are saying? Let's keep our ear to the ground and respond to them. And it's like, well, I mean, come on, they're not going to do it. It's like, well, there are many, many hedge funds out there. There are many, many financial institutions that want to make money, and they have their own degrees of who's the inner circle as well. So if you're kind of a mid-tier or low tier, there's a big upside to going after this new trend and acting on that basis. And then if you do well, even just a little bit, there are going to be plenty to follow you too. So, that I think we'll see the tide changing. And the largest institutions are always like the last ones to really make that move. But in general, finance as an industry has historically been extremely responsive to technology. People always underestimate that. They think, oh, the financial institutions are never going to change. No. You go back to the 1800s even, when the telegram was invented, and soon after, within decades, like the stock ticker, what we call the stock ticker, that teletext. Mm-hmm. I didn't know, I thought oh, that probably came around in like the early 20th century that these brokerage houses or whatever started to get that. No, by the 1880s, thousands of offices in Manhattan had those stock tickers. That's crazy. It's a crazy thing to think of that. And when there's a profit incentive, that you want to get those stocks early. Yeah. When computers came out in the 1950s, computers came out in the 40s, but in the 1950s, Bank of America started computerizing all of their banking records. It's amazing how quickly they did that, and then all the banks started to follow suit. And then we started to see corporate and non-finance institutions in the 60s. There was an episode of Mad Men about this where they got the computer, and and colleges started to get it, and in the 60s and late 60s and 70s until ultimately 80s, 90s, you start to see it a bit more everywhere until the personal computing era of the late 90s, 21st century started to prosper a lot more. So finance is always the first to adapt. Internet too, Ray Dalio's book talking about, and facts and the internet, mm-hmm. Very, very responsive, because there's an edge to that. So we are seeing, of course, we've always seen financial institutions react to Bitcoin. They reacted very quickly to crypto. They're reacting very quickly. It's just it's a wild west because it's very hard to predict. A lot of things move around. There's a lot of technology. There's a lot of tumultuous nature to a lot of these assets. So people are still learning, and the institutions are going to continue to adapt. And regulation, I think we've seen some very positive signs from the United States government in particular, which shows that I think regulators are understanding what this means and how much good it can bring. That it's not about like resisting change, but embracing it in the right way to aid entrepreneurs, aid financial institutions, and that we can actually finance and grow the economy in ways that we never thought possible. So the first great sign of that was the comptroller of the currency in January saying, okay, now banks can start to like give out some broad guidelines, but it was still early, but some broad guidelines on you now accept stable coins as settlement. That's huge.
Yeah.
That was considered insane before. But now it's like, really? And now we saw an announcement by Visa and working with USDC to, as a payment layer, so they can get that going as well. But
yeah, it's the competition. The competition you were talking about, because if we put a stop to it, they try to slow it down, and they don't adapt to it. You talked earlier about China or Russia, and all these countries are technically our enemies, or rivals. Competitive, yeah. So then you have a country like Turkey who recently just banned, or they're trying to ban cryptocurrencies, but right now India a couple of times has tried to ban Bitcoin, and it's just like they're kind of hurting themselves, by trying to do that.
Yeah. Also, it's ineffective because if you, like, let's say you ban exchanges, you'd see the rise of things like local Bitcoins or things where peer-to-peer people can meet and coffee shops or whatever and make the trades themselves. And what's so damaging of that for regulation is that once those pathways in society are connected to which they can do whatever they want, with or without consent, it's effectively underground or in the shadows, that, then nothing else matters. They've adapted against that regulation, and then they're also going to be very preemptive of that kind of regulation in the future. So I don't think those types of actions are a good idea, for a country that wants to bring in, a jurisdiction that wants to bring in order. It's much better to embrace it, bring them to the table, say to the exchanges, look, we just want to, to make sure everything is going okay. Let's talk, let's learn together and all of that. And yeah, I don't think there are any exchanges out there that don't want to have the blessing of their jurisdiction. I mean, of course they want that certainty. They want to be able to sleep at night, So yeah, I think the jurisdictions more and more are getting that, through their heads in that regard. But yeah.
Can you tell us now a little bit about Tezos?
Sure. And those are all asset classes that are like stores of value or payment mechanisms. But what we saw with the coming of smart chains, blockchains that are smart contract protocols like Ethereum are basically creating these assets that are like supercomputers for the world to build dApps or applications on top of. Tokens or even just programs that are maybe associated with those tokens that we keep hearing about, those are built on these smart contract protocols like Ethereum. Tezos is one of those. It came later than Ethereum. And the reason why I went behind it and not Ethereum or something else has to do with a lot of the problems that I found with Ethereum. And it's something that Bitcoin faces as well, but I think it matters so much for these smart contracts. And that has to do with contentious hard forks. So whenever there's a dispute in the community for a particular blockchain, and this is inherent to open source technology overall, what happens is, and they can't resolve it, you'd see a split in the community. Some developers and node operators and people with money, and they say, okay, we're going to go our own way. We're going to have our own version of the blockchain. Now, a blockchain is always united. It's always the same chain of events that keep happening, and they stay together until there's a hard fork in which there's one chain that keeps going in one direction, and then there's another that goes in another direction. And they're both maintained. At that point, they're disparate. And whatever happens to the protocol or the events on chain, it happens separate to each chain. But they each claim to be the righteous one that continues the path of the original chain when they were both together. So what happened, like, for example, with Bitcoin and Bitcoin Cash is there was a contentious hard fork. And if you had, say, 100 Bitcoin, you could split there. When that split happened, you'd also basically have 100 Bitcoin Cash. And both chains claimed, and those that operated it claimed that this was the real Bitcoin. The Bitcoin Cash people were saying, no, this is the real Bitcoin. We're the ones who embody Satoshi values and all of that. You guys are the deviants. Saying, no, you're just this new thing that's trying to cash out and do your own thing. No, we're the main chain. But whoever gets the most node operators effectively become the most, those who run those systems in a decentralized way to maintain the chain, that effectively becomes the main chain that we accept for all intents and purposes to be the main one. And then there was another split. There was Bitcoin Cash ABC and Bitcoin Cash SV. And originally, Bitcoin Cash SV was on top. It was the market cap was the highest, and people thought, oh, well, then that's the one. That's the one that's going to be crowned the Bitcoin Cash. But then slowly people started to see who was behind it, and then lost faith in it. And then Bitcoin Cash ABC started to rise, and then eventually surpassed Bitcoin Cash SV, and Bitcoin SV started to diminish. And then after a while, it just like, how do you declare this thing? It was CoinMarketCap, CoinGecko, Coinbase, they all started to say, you know what, on our listings, we're just going to call this Bitcoin Cash, even though it's Bitcoin Cash ABC. Let's just be simple. Things change, we'll change it, but that never happened. So now that's Bitcoin Cash SV is Bitcoin SV, and then you have Bitcoin Cash. But then that was a split, and two asset classes emerged in that regard. There are things you can do in that situation. I know a lot of people who thought, oh, that's all bullshit. I'm just going to sell the SV, I'm going to sell the ABC, and I'm going to buy more Bitcoin. Okay, fine. But that's a new coin that's out there. So someone's losing value who bought that coin. And then the same thing happened. There was in Ethereum and Ethereum Classic. And as the bigger an asset grows, the more likely they'll have a contentious hard, unless there's some way to avoid that, some way to render it unnecessary, to deal with contention in a manner that isn't divisive, and in a very literal way, divisive, because that's a problem for those assets that are built on top of it and the people who hold it. So, what happens when you have an NFT, right? And then there's a contentious hard fork, and then that NFT, well, then there's another NFT there on another contentious hard fork chain. And then you could, you sell that? Well, then somebody buys it, and then they think they own the NFT.
Yeah.
But does the artist recognize that chain? Maybe some do. Maybe some recognize the other. Maybe they're still deciding, or maybe they didn't like this happening either way. So it's better to have one chain. And the same and think of financial institutions now that want to put maybe millions or billions or trillions of dollars. How do you deal with those hard fork splits? I mean, how do you manage it? I mean, it's not just about the fact that the assets split as well, because you have to figure out what to do there, but it's also like, well, what's happening to the future of this blockchain? I thought this development plan was going to happen with the core protocol. I thought it was going to develop like this, and we were going to get all these great features and all that. Oh no, they had a fight. They couldn't make up. Some developers went this way, some went that way. Well, so what's going to happen? What do I do? Like, well, you could maybe follow one thread or the other, but both sides are scrambling to see what to do next. Well, how do you explain that to your board of directors? How do you explain that to your clients, to your investors? So to me, it was like, well, if we're all going to see finance always leads the way, like I was talking about. So if we're going to see financial institutions come in, I don't think they're going to be a big fan of those contentious hard forks. Now, let me walk it back a little to see, well, why did they let this happen? Why hasn't this been addressed? Because actually in the development community, largely, and the open source community, contentious hard forks or hard forks, it's a good thing because it enables more innovation to happen in different directions, innovation that wouldn't have otherwise happened. One does not have to say, no, I can't build this thing because collectively. That's
the way it is, yeah.
Yeah, I'm just going to go build it. And then that biodiversity leads to so much more innovation, faster, better, stronger, smarter. That's a lot of, you can look at Android as an example of that as opposed to iOS. iOS is very consolidated. It's a unified ecosystem. But Android, you can do all kinds of open source splitting, have your own distribution of it. You could, branch off to your own thing. There are many different versions of Android. It's not even like there's any. But that's also why we see when a big formal project comes on board, like say Clubhouse, they'll put their app on iOS first because it's a lot easier.
It's stable. They know what it is. They know it's not gonna. Yeah, they don't have to adapt to all the different ones. They just go to the main one.
Exactly.
Okay, makes sense.
And then eventually, once that's stable, then they'll say, okay, now maybe we'll try for all these different Android versions that are out there. So to me, what's so great about Tezos, when I read the white paper, I thought like, oh my God, they figured it out. This is the way to do it. You don't want it to be unified. You don't want it to be a company owning things. You want it to be decentralized, owned by the people, like a Bitcoin, right? But you also got to see that there's got to be a better way for these types of divisions and thought to happen. There's got to be a way to come to the table. And like democracies figure that out. Democracies, we have in the United States, very polarizing times, always really. A lot of division, a lot of contention. Once in a while, you hear some state saying, we're going to secede from the union. Just like I think Rick Perry said that at one point. There's a lot of that. But in the end, we all come to the table, and then we're the United States.
Yeah.
That's what's so great about a union like that. And we can expel leaders if we don't like them, that we work on collective action, all that stuff. That's the dream, right? So Tezos operates on principles like if all the contentions and all the disputes are handled within the blockchain itself. So there's no company, there's no figurehead, nobody running this thing. Instead, it's just a network of node operators, bakers, all over the world doing this, sustaining the network, making the blockchain work. And any one of those bakers all over the world can put in a proposal for an upgrade to that smart contract, to that core protocol, to basically say, here's the way we should go forward. And they can get a quorum of people who will agree with them, and enough bakers agree, then it can move ahead through the process of being able to iterate, to test, explore, promote, and then ultimately a supermajority vote would be able to adopt that into the blockchain. And we've gone through several different cycles, about 5 cycles completely in the past, and now we're going on to the 6th one. So it's worked, and we've kept from those contentious hard forks. And so it's not that it prevents it from happening. There's no way you can prevent it. It's an open source, but the ethos and also the technology and governance process renders that unnecessary. So everybody is kind of in this to say, look, even if we don't get what we want when we put out a proposal, we're going to stay together. Mm-hmm. And even on a very well, I don't want to cooperate, I want to do my own thing kind of sense. It's like, if you lose a vote for your proposal, and you believe you're right, well, then history will probably show that. And then the next time there's an upgrade happening, you'll probably have more gravitas. That's how things work in democracies. Well, so so there's that incentive to stay together. And I believe that's what financial institutions are finding in Tezos and will continue to find. That's why I decided to build DeFi projects on Tezos as opposed to anywhere else. And I think that's why you also see, you're going to see a lot more activity in the NFT front even. We've already seen a lot of growth on the NFT side for Tezos. Mm-hmm. The consequences of this, I think, led to the reasons why so much growth is happening on Tezos in that regard as well. Because we have that benefit. We know we're going to stay together, so we don't have to rush anything. We don't have to rush anything for marketing or to keep people under the same tent. It's just like, we know we're going to be together, so we can have that, and then also have the benefit of hindsight of looking at Ethereum and those projects and seeing what did they get right, what did they get wrong, and then rebuild from the ground up in a better way. So, and prepare for the future. So we preemptively prepare for growth and scaling, and in regard to gas fees, we can prepare for features that people are going to.
What are the gas fees on Tezos or for NFTs, or how does that work?
Less than a penny.
Really? Wow. Because I really don't know that much about the project, so that's I'm learning as we go.
Yeah. It's less than a penny. I think that's what people love about it the most, because it's just so obvious. It's like, oh my God, I just minted an NFT and I didn't have to, and I sold it, and I only paid less than a penny for gas. That's ridiculous. That's insane. So that's part of it. And then also, I think this is, like, as I mentioned on the energy thing, it hasn't been a point of contention too much in the blockchain community, crypto community, thus through, I think, last year until the NFT stuff came up, but now it really is a big deal, because to artists, more disproportionately to every other segment of the crypto community, they really, really, really hone in on this point about energy consumption. And it's not even necessarily the artists themselves, it's their fans. I thought it was just maybe incidental, but it's pretty widespread. When a lot of artists, when they hear about NFTs, or they maybe broach the subject, maybe they want to do one, they have patrons that have maybe given them thousands of dollars over the years cancel them. write scathing messages on their Instagram and all that. And it's because they see it as just a betrayal to everything that they hold dear and poor values and a cash grab.
Cash grab, yeah.
You could say that's wrong. That's overstated. They shouldn't be so quick to judge. They shouldn't have that knee-jerk reaction. There's a lot of stuff we could see there. We could see maybe Ethereum is moving towards a proof of energy efficient route. They're trying to get to that point, that there have been adoptions of newer technologies to make it better, and that's a way forward. But that's not really fully the case today. But nonetheless, how do you say an artist isn't going to go and that's not going to be convincing. So if it's like, well, I'll try this NFT thing, maybe it'll work out for me, maybe it won't. But I know if I try it, I'm probably going to lose at least some business, and that's my livelihood. I can't go that route. What's so great about Tezos is it's proof of stake, which is very different than that mining system that's so energy consumptive of Bitcoin and the current version of Ethereum. And it's a fairer system economically too. Instead of competing based on processing power and the energy consumption that it requires, the competition is based on just the ability to hold and to stake the coins that you have, where the temptation and to basically pledge that into the system. The temptation is maybe to sell it to make some money, but if you believe in something, you'll lock it in, you'll keep it there, you want it to stay the long haul, and for that. If others leave, you're maybe one of the few, let's say you're the few people on Tezos that are doing that thing, your return is much higher than it would otherwise be. If most of the Tez, or let's say all of the Tez were to be staked, then the return per person would be a lot lower because there's more competition on that front. So you're rewarded for believing in it more than others who don't at that time. And that is much more equitable because it's not based on who has access to cheap electricity and processing power and all of that, which really cuts out most people. Yeah.
That we can't afford, especially with 2020, where a lot of the cards, like you can't even get cards because people are gaming, and there's even Nvidia and them, they're creating cards specifically for like Ethereum and specifically for Bitcoin. Yeah.
And back in the day when Bitcoin started, like the competition, and the energy required for it was very low. The reason why the energy growth demand increases exponentially is because as more people compete, there's an algorithm within Bitcoin that for the mining that gets more and more complicated. It responds to the more competition to say, oh, okay, more people want this, let's make it more complicated. And all this machinery does is it's basically trying to guess a number that algorithm produces every 10 minutes. And if it can guess that number right, then it gets a return.
The reward, yeah.
Yeah, so, and again, the more complicated it gets, the harder it is to get the more computing processing power you need. It used to be you could just use your own laptop computer to do that mining because it was so simple. In fact, in the very beginning, you could even solve that. It's actually a math problem. It's not guessing a number. It's a math problem you have to solve. You could actually solve those math problems by hand in the very beginning.
Really?
That's how simple it was. But pretty soon it's just like, okay, there's no human being who could solve this in a quick amount of time in 10 minutes. So you have to use the computer to just guess the number. And then that started to escalate. That's where I don't know if the Satoshi and the original users of Bitcoin and miners of Bitcoin imagined we'd be in a world where the energy consumption would have been so high that we'd be having this kind of conversation. I mean, I think about that a lot because it was so simple at the time. There wasn't a concern. But if you played it out and think, well, eventually there's going to be competition to this effect. Eventually we're just going to start guessing a number, and then people are going to have to get more processing power, and then that's going to escalate, and then that's going to take on more electricity, and then there's going to be a backlash to that. Like it's hard to.
They kind of did that into the code just to create more security for the network, right? Just to keep every time it just gets harder and harder and harder. So it's pretty much hack proof because the computing power that would take to hack the Bitcoin network, you might as well just use that computing power to just mine, right?
Yeah, and it also just makes sure that that it is competitive. So competition is a good thing. I mean, the more investment that goes into it, that increases the strength of the asset as well. it can be very, very difficult, and you have to keep up with that. There are people who made a lot of money mining Bitcoin in the early days, and they maybe had their rigs and all that advanced equipment, but they just couldn't keep up with the escalation of competition and the need to get more and more and more processing power. And then the electricity to manage all that was just like way too expensive. And then, they were out, and they kept reinvesting. Many people kept reinvesting all the money they made in Bitcoin to just get more equipment so they could mine more Bitcoin. And at the point for a lot of people when it collapsed, it's just like, I can't sustain this growth anymore. They either move to like Iceland or somewhere where it could be cheap enough, somehow strap into a cheap electricity source. But if you were lucky enough to do that, and then you have to move all your equipment there, or you had to fold. So yeah, it's a kind of a crazy world.
So on Tezos staking, could you explain a little bit about Tezos staking? How can you stake? And there's another question is so the Tezos, it doesn't have there's no like max supply, right? It just could keep going 5% a year.
Right. Yeah, so there's no supply cap at this point, though the governance could decide through that same process I described that, maybe we should have a supply cap. But so the way it works is Tezos, if let's say everybody were staking, 100% of all Tez in the world were being staked, then the supply of Tez would grow based on an inflation rate that's an inflation minimum of the blockchain. And that's about 5.51%. And that was said in the original white paper. And so if you're staking, you're actually just growing. You're not getting more money. You're just growing with the natural rate of inflation. So that's all that is. If someone wants to, I'll get to the more complexities of what that means. But so you're just growing with the rate of inflation. Now, let's say very few people were staking. Like, let's say 20% of all Tez were being staked. Then the inflation rate could go to 20, 30, 40% or more. And then, so that's very incentivizing because you really don't want to lose out with the rate of inflation, because then the amount you have with the overall supply, like that's going to really start to shrink. So it incentivizes more people to do it, the more that inflation rate increases. So that's one thing. So there's an inverse relationship between that inflation rate and the staking ratio. More people are staking, more Tez is being staked, actually, then the lower the inflation rate is. The less it's being staked, the less Tez is being staked, the higher that inflation rate is. So it incentivizes more and more people to stake so they can get whatever amount is going on. So about 80% of Tez right now is being staked. That number is more likely to go up over time than go down. So that's a great thing, and it keeps the supply tight and online with the system, and makes sure it's nice and active and participatory. So there's that. So you might see things like services that are custodial, like an exchange or some kind of a place where you buy your crypto, saying, hey, you can stake your Tez with us and we'll give you a 4% yield annually. Well, that's less than the blockchain minimum. So they're taking a big cut if that's the case. And secondly, they're not giving you an extra return. They're just keeping you from growing. They're just helping you grow with inflation. And they're not even giving your full cut or anything near that. Now, some kind of a fee makes sense. I mean, like it takes effort to run on your own and to stake completely by yourself. But it's to take that much is pretty monstrous.
Yeah, because Coinbase, Coinbase gives you, I think you can stake Tezos on Coinbase, I think, right?
Yeah, so that's a custodial service. So you're not actually having it yourself, you're keeping it with them and then they're staking it. But if you go to like a Tezos wallet, like Galleon, like Temple, like Kukai, there are plenty of these Tezos wallets out there. And even you could do your Ledger Live, you can choose your own delegation service. And what that is someone who's doing the staking, they're running their own staking node, which we call baking in Tezos. It's just called baking, that's what it is. And then they'll run this baking delegation service, and then they'll charge their fee. And their fee would be like, could be 10%, 5, 15, which is a lot better than than taking a big chunk, maybe even, up to half of what you should otherwise be getting. And you can compare rates. There's a site called Tezos-nodes.com. There's Baking Bad. there are a couple sites out there that you can compare different bakers and their rates, or you could just go on their individual websites and see them. But there are hundreds of bakers that are doing that as a public service, and they're competing with each other to get more people to come into them because they can get a fee out of that. So that's like a reasonable competitive, and that's how you can make more money by staking, by running a delegation service. And so that's one way of going about it. Yeah. So what is missing though in the Tezos ecosystem, and this is something we're working on now, is a lending system so that an actual yield and return beyond your baking rate can be made. Mm-hmm. So in the world of DeFi is decentralized finance. So there are a couple main parts to it. I'd say there are three main parts. One is to have stablecoin assets, hard-backed stablecoins, coins that are going to always stay that price because it's backed by fiat and all that. Yeah. And this isn't exactly pure crypto because there's some asset that it's connected to. But also, as long as we're saying the price of Tez or the price of Bitcoin, that fiat, that US dollar is always going to be a component. Otherwise, we would never say that. We would just think that as unit one.
Yeah.
Never think of it as itself as variable. But as long as we're doing that, that's really what's connected to that line of thinking. So that's needed. And then you have like some kind of reaction of matter and antimatter between that native asset, like Tez, and a stablecoin like what we created, which is USD Tez, and that's a fiat-backed stablecoin that's hard-backed. Or like on Ethereum, you have the ETH, and you'll have USD Coin or Tether. Mm-hmm. Plenty of stuff like. So that's the basic element. But then you need decentralized trading because that's where you actually do it. You don't want to go to a centralized exchange. And also you want to be able to provide liquidity for the people who are trading and make a return that way, make from transaction ratios, from transaction fees. So that's how you make your return by participating in a DeFi ecosystem on a very basic level. If you're not trading, you can just take, okay, here's my USD Tez, here's my XTZ. I'll put them in a liquidity pool for people who want to trade. You can do that on Dexter Exchange, Dexter.exchange. You can do that on QuickBooSwap Exchange, which just launched recently and a highly anticipated project, QuickBooSwap.com. And yeah, so you can start to add to those pools, and then you'll make returns based on, you'll get a pool token, and or pool tokens based on how much you put in. And then you'll start to get returns on that basis based on people's transactions. So that's that. But then the last component, the third component that makes the DeFi cycle totally complete, it's not just the trading of these coins to make more money. You also need a reason to keep your money in crypto. Like what's kind of a long-term hands-off basis? And also, what about the taking money and like in a banking world, you want to be able to borrow money, put it in an investment, get a return, bring it back. I mean, that's how the cycle is totally complete. So that's a lending system. A decentralized lending system is that last part of DeFi. So the key decentralized lending platforms on Ethereum are Compound. So that's compound.finance. They were the ones, in my mind, they're the ones that really started it. I mean, they did a really great job getting that out there and creating a truly decentralized lending platform. And then Aave is the other one, AAVE. Mm-hmm. Aave did they're very similar. Aave allows also fixed rate lending. Compound, it's floating rate. So it varies. The amount of return you get varies based on how much people are supplying and how much money is in the lending pool. So our version is TezFin, Tezos.finance. So Tezos.finance will be that third component. And so it's very similar to Compound in many ways.
Is that already available or is it coming?
Not yet.
It's coming.
We're still building it out. But it'll be out soon. It'll be wonderful. Will be Tezos. Will be DeFi cycle complete. So thus far, we put out USD Tez. We put out ETH Tez, which has been very interesting and a lot more popular, a lot quicker than I even initially anticipated, because you have a lot of these traders who are going from on Uniswap or these types of exchanges on Ethereum that want to trade back and forth between Ethereum and US dollars so they can make money because they're looking at the trends, they want to make money, but their returns are mitigated by all of the gas fees on Ethereum. The irony of that, right? But if you convert your ETH to ETH Tez and you trade back and forth with USD Tez and ETH Tez, like you can on Dexter, like you can on QuickBooSwap, well, then you don't have to pay those fees. You can just pay like that penny fee or whatever. Yeah. And then like it's all profit at that point. It's all, you're making money. And then you can convert back on another platform we have out, which is called Tezex. So Tezex is Tezos Exchange. It's a Tezex.io. And what we did with that is it's not just like an exchange. In fact, right now, it's a cross-chain asset bridge. So you can take your USDC and trade it for USD Tez. You can take your ETH and trade it for ETH Tez and back as well. And it's not custodial. Like if you can be a liquidity provider for that, you can put up your funds for trading and get a fee out of it. But you hold on to all the assets you have if you're providing liquidity until there's a time to trade. You have this satellite node, we call them satellites, for the liquidity providers, who we call change makers. And then once there's a request on the website to swap, they all get notified. If they can supply the liquidity, if they can supply the trade, they'll trade back. And then a signal will go back, and then the swap will happen between two different blockchains. And soon we're going to be adding in the next few days XTZ swaps, so we can have token to token trading on Tezex, and then we can finally do that at depth at a level that's not even available on the current Tezos decentralized exchanges out there. So a lot of exciting stuff comes together.
It sounds like you guys are working on a lot of different stuff. Definitely selling me on Tezos right now.
And all of this is under Tezos Stable Technologies, which is a consortium of multiple companies, the Tezos ecosystem, including my company, WealthChain, Cryptonomic, which made the Galleon wallet, Kansei.js coding language, Nautilus Cloud, Aeronax, Block Explorer. So they've been just phenomenal in the Tezos space as well. Bolt Labs is also part of that. Bolt Labs, they've been instrumental in adding Z saplings. It's not to get too lost in the weeds of technical, but it was part of the more recent upgrade of Tezos. You might have heard of Zcash and the ability to have privacy payments and all of that. One of the great things about how Tezos is constructed, as I said, we have the benefit of hindsight. We can look at what happens in other blockchains, implement them in our own way. We brought that into Tezos. So for a lot of people and for all their intents and purposes, they're like, why use Zcash? You can just do that stuff on Tezos. So that was largely Bolt Labs that was responsible for the core protocol that contributed their efforts. And then they're working on implementing that for USD Tez and ETH Tez so that we can start to have our coins be traded with those ZK channels, those zero knowledge channels. So privacy payments would be implemented. And we're all backed by Draper Bornholm. So Tim Draper, who was very instrumental in the initial crowd sale and fundraising aspect of Tezos itself, is on board for this project and where we're going with DeFi. So they've been great to work with, Draper Bornholm. They're really wonderful in the Tezos space. They just got actually a big investment by the Tezos Foundation and plenty of private investors. So they're into Tezos for the long haul. And that's really an exciting thing. But it's going to be amazing very soon. I think once we get the lending system out there, we'll be cycle complete, and then the rest of what will happen will be derivatives. So not only will we be able to bring in so much money into the Tezos DeFi ecosystem, but a door will be open for entrepreneurs to build all kinds of yield farming platforms in the derivative space, which will far outpace anything related to the core if we look at traditional finance as an indicator. So it's going to be huge. It's going to be just so, I think it's going to escalate even faster than Ethereum did, because they had less than $1 billion a year ago locked in DeFi. Now it's 50 billion in DeFi. Wow. So they had very meteoric rise. So you can see a lot more things like that happening, and not just in the Ethereum space.
Now, right now, do you believe in like the golden Bitcoin bull ratio, or the whole that we're going to enter a bear market coming up soon, or how's that going to affect Tezos? How do you guys plan to incentivize people to keep using Tezos while the demand kind of goes down for a little bit?
Yeah, I think because Tezos is such a decentralized platform in which you do have all these independent node operators, bakers, in competition to get more Tez so they could expand the strength of their own baking offerings, that will continue to grow as a network. And the more that grows, the more competition there will be to buy Tez on dip. when the price dips. So that's something we've seen throughout the history of Tezos. It's not something new or necessarily we're anticipating to happen in the future. We've seen that over time. But as the asset grows, then there's demand for we need more bakers. So I think as we continue to grow the baker network, that'll just reinforce the confidence that that Tezos would be able to do that. If you were to see a shrinkage of that baker network, then that would be something to be concerned about. But I'm confident that it'll continue to grow, especially as staking becomes much more accessible. A lot of people are much more curious about it, especially as Ethereum plans to move to a proof of stake system, so that people are moving into that overall. And I'm sure they're going to be coming in to check out Tezos as well. Why not? And it's much more accessible to more parts of the world. So I think that will help it decouple from Bitcoin more. As it has in the past, and it's been pretty resilient on that front, and it'll continue to be so. But consolidation of the markets is not a bad thing. It's ultimately a healthy thing. When it's going to happen, like when we're going to see like a big crypto winter, I'm not sure. I think we still have a lot of growth to see this year. I think it's still early in the year. Like there's still a lot more to come. Eventually we overshoot it, and as a crypto world, and then we need some consolidation period to happen, but you know, we'll see it move. It's still very small, very early. As much as we want to see multi-million-dollar price of Bitcoin, you know, if we were to see it tomorrow, it would not be very trustworthy.
Yeah,
you know?
No, everyone would be expecting a big correction.
Yeah, there were people who were looking toward in 2017. They were saying, "Oh, we're going to hit the hundreds of thousands." Like I'm damn sure of it. We all wanted that to happen, but that doesn't mean that makes much sense on an economic level. I think those who had anticipated would probably just sell right away because they wouldn't trust it, or the expectation that it would, wow, this grew so fast, so hard. We gotta get out. We gotta take our earnings. It's more like and that becomes a self-fulfilling prophecy. So there's no real way around those consolidation periods. It's just a question of, you know, how long do you want to ride the growth? And hats off to those who just stay the course. I mean, my personal rule, just so you know, is like I tend to keep my Bitcoin in Bitcoin. At very little times would I mess around with volatility trading or anything like that, mostly because I don't have the time to keep my eye so close to the ticker in that direction, you know, but also because it's kind of a good practice. Like if I do want to buy more Bitcoin, then I'll buy it with something else, or there are other assets that I find to be very interesting. But yeah, it's that. I think that's a nice way to play it. That works for me. That might change in the future. I have no idea, but
as for us now,
I just keep it in Bitcoin, and that's that. Yeah.
Just hodl forever or just keep hodling. For somebody, okay, so how do you become a baker on the Tezos network? Is it, let's say somebody's listening to this and they have like zero experience and they're interested or finding out more on how to become a baker. What would be like the first steps they need to take?
Yeah, you can go to Tezos.com. So Tezos.com. Yeah. You can look up baking. There's some upgrades to the site, so more recently, but it should be pretty front and center. There's a baker Slack that's been very, very helpful over the years. That's been around since the beginning. And there are Tezos baking communities on Telegram. So plenty of resources and guides to baking that are out there as well. So resources you can get. And there's a whole community of Tezos people out there that would love to help you out. So don't be intimidated, don't be shy. It's a very welcoming community. Get to know people, get to network, make sure that you have the right contact. Many of them take in their tutorial videos. There's even there's a video out there where they teach it's called Proof of Jack. They teach a kid how to bake, which I think a lot of people found comforting, because it's like, oh, well, if this kid can do it, so can I. So definitely get involved, start a baker out there. And you can take part in the governance process and vote and help shape the future of Tezos. So it's very participatory. It's the most participatory blockchain there is. Which is also it's letting Tezos expand to the far reaches of the earth. It's not just about getting to the high profile regions, but we have a project going on called the Quokka Project, Quokka.org. So it's to build 10 staking nodes, 10 baking nodes in Africa, in sub-Saharan Africa in 2021. Tezos Nigeria has already been built, so Cameroon is going to have their next, the one that's going to be next. Other ones include Ghana and Senegal. We're going to get 10 baking nodes in 2021, and we'll go from there. It's really amazing just seeing all these very regional localities that are often neglected in the scope of crypto, because people are very focused on LA, New York, and London, Paris, Berlin, and maybe the Far East as well. But it's like, no, it's really, if this is really a global enterprise, let's think about the entire globe. Let's think of South America. Let's think of sub-Saharan Africa. It's not just about making the rich nations richer, or the ones in the rich nations who didn't have their chance with the richness.
And that's definitely like one of the things, because those are the countries that would need more than just relying on their governments, because everything's so unstable over there. You want to get and learn about the possibilities that the internet can provide. Yeah.
And can you imagine them mining on a proof of work network, the amount of processing power and electricity and internet reliability? It's very, very hard. So certain systems, while they might be mathematically sound for competition economics, they're not necessarily conducive to giving an equal shot to the rest of the world for all practical intents and purposes. So we need to be mindful of these things, if nothing else, for the expansion of the credibility of these platforms, which is ultimately what's going to matter the most. People are going to adopt, at best, the most credible systems that have been the most egalitarian, most embraced, most global. That's what ultimately wins. Open is what ultimately wins every time in the history of technology. So that's one of the things I love about this ecosystem, about Tezos. So having unity enables us to expand more.
Yeah. No, that's awesome. And so anything, I'll put links in the description to definitely all the websites if you can send me some links for anybody listening. I want to learn more, Tezos.com, or anything you want to lead people to.
Sure. And if you're interested in getting involved in DeFi right now, so there's USD Tez, and it's a great baseline way to get started to add to those liquidity pools. So you can go to usdtez.com. That's USDTZ.com. So USDTZ.com. That's where you can find more about USD Tez and all the things you can do with it, where you can get it, how you can trade it, wallets that support it, and how you can get started as a liquidity provider on those exchanges. So I think it's a great time to get in on Tezos DeFi. Early, it's growing quickly. It's hot and ready to pop. So I feel that's where the strongest upside is for those that are keen to look. It's interesting. You have to see it kind of grow sometimes before you can believe and say, oh, why didn't I get it on it before? It's like, yeah, but I hope if I did nothing else today on explaining DeFi, it's that all the science and components are there that would enable that massive growth. And then from there, do your own research, because I'm confident in the end you'll see that Tezos is that next big thing.
Yeah, it's definitely a lot of knowledge in this conversation, because I didn't know half of the things that Tezos was doing. I've only heard of Tezos a little bit, and that's how just blew my mind. And I definitely want to do some research. I'm gonna try to become a baker. That I think you definitely encouraged me. I'll definitely go into the process myself.
Awesome. What do you want to call it? You get to choose a name.
I don't know.
There are a lot of fun names out there.
What do you mean, the
Angel Baker? Oh, there's bacon rolls. My friend started one in Puerto Rico, so he called it Tezo Rican Baking. There's a lot of stuff out there. There are a lot of fun names. Bacon tacos, Tezo Gator, lots of stuff like that. So you go to Tezos-nodes.com and you can see the names listed, reputation, everything. Yeah.
Okay.
You'll see that.
Okay, Kevin, thank you for joining us on the podcast. Make sure you guys like and subscribe, and then we'll definitely stay in touch. I'll stay in touch with you because this is such a great conversation and just blew my mind.
Awesome. Thank you, Angel. Thank you for having me.
Okay, thank you. Have a good one.